I want people to understand, if the CME is doing this to Bitcoin, if the banks are doing this to Bitcoin, that hopefully trickles down to everybody that follows me on Twitter going, wait a second, you mean the banks aren't my friend? Seriously? The banks are out to screw me? Yeah. The banks and the central bankers are trying to control everything.
Hey friends, how are you? Thanks so much for clicking play. If you hear some excitement in my voice, it's because I finally have my friend Craig Hemke, aka Turd Ferguson from tfmetalsreport.com back on the line, and I highly recommend that you follow him on Twitter, one of the best Twitter accounts out there. I love your tweets, Craig. How are you? Welcome back.
Hey, Sean, thank you. It's always a pleasure to visit.
It's such a pleasure to have you on, and I have to tell you, I have not been closely following silver and gold, and I'll tell you why. These criminals, these banksters, these paper-manipulating maniacal monsters have sort of sucked the life and joy out of me as it pertains to precious metals. Now, I still hold all my silver and gold, and over the past year, I bought some more silver on a fairly regular basis, but following the prices is absolutely depressing. And so we can start there, but I just want to call attention to this tweet you just sent out. It goes like this, guys. Wow, this is clearly a bubble. Worse than tulip mania. The parabolic nature of the chart proves it. Only idiots and dolts would play in the greater fool's scheme. This will only end in fear and pain, just like all bubbles in the past. Hashtag not Bitcoin stock market. And he notes monthly RSI is the highest value in 100 years. I just wanted to share that. It's a fresh tweet, Craig. And the reason I wanted to lead with that is because we see what they do to silver and gold. Now we see what they're doing to Bitcoin through the CME futures, which we can talk about. But look at the Dow. It just goes higher and higher into nosebleed tulip territory.
Yeah, it is pretty remarkable. I should add that I got that chart from a guy on my site, kind of reinforcing the value of the site. Everybody says the community is great, and it is. And that really is the value of the site. A guy printed that chart up. And that is, it's a chart of the Dow Jones Industrial Average. And it is clearly parabolic. I mean, it's on it's just a linear basis, and it goes back 100 years. But if you were to just look at it and you lay it in front of somebody and say, hey, what chart is this? They'd probably say it was Bitcoin.
Right.
And of course, every, I guess we'll call them traditional analyst is out there, scared to death of Bitcoin, and so every time there's a downtick, they, all you hear about is tulips, and all this other stuff. Because everybody wants to be the one to call the top, and then Joe Granville made a career out of that from 1987. So everybody's out there trying to do that, and that's what that tweet was about. Was that, wait a second, this looks just as bad if that's the way you're going to look at it. Nonetheless, anyway, you mentioned the metals. Yeah, it is. I think that's probably why I have, about 5 different antidepressant medications I take on a daily basis. It has been a really tough, challenging 5 years. But I think at the end of the day, though, we've got a pretty good handle on why things have played out the way they have, what is driving the banks as they manage the price for their own profit. So we can talk about that as well. But at the end of the day, I think it will become clear as we go through this year, as the dollar falls again, and as the dollar yen falls again, and interest rates continue on the long end to trend lower. I think it'll become clear that forces gold up through 1,400, and then folks, anybody can look at the chart at that point and go, hey, look at this. I think bear market is over. It ended some time ago, and now things are breaking out. And we might get some kind of virtuous momentum going again. And gosh, maybe even you, Sean, you'll start getting excited about it again. We'll see. But man, I don't blame you one bit. It has been a long slog for the last 4 or 5 years.
Well, yeah, and I'm always excited when I receive a silver shipment, from my friends over there at SD Bullion. I love holding the stuff in my hand. It's beautiful.
Yeah.
But what is disheartening is the fact that they have stomped and continue to stomp us down. Well, you just tweeted again here in the last 24 hours, silver tweet from TF Metals. Just your normal, free and fair silver market overnight flash crash of 3%. And if you look at this chart, it is the same chart we've been seeing week after week, Sunday night after Sunday night for, God, it feels like a millennia, but at least 5-6 years. And they just get away with it ad nauseum. There's no stopping these banksters. And yet they have plausible deniability, supposedly, from the
CFTC?
Yeah, thank you. You remember that old CFTC meeting where the cat was let out of the bag that they trade paper metals 100 to 1 times the physical.
And people will say, well, and you've heard it today, there's not that much physical metal out there. There isn't. But in the physical market, as The market uses that term. There is much more metal than that. There's 100 times what there is.
Yeah, and you talk about the cat being let out of the bag, and I'll go back to the stock market for a second because you talk about how it keeps going up. Well, look, I'm an observer. That's what I basically do now with my life on a daily basis. I do a little bit of trading, and we've been doing quite well over the last couple of weeks because it became so obvious that the metals were going to rally here in the short term. But mainly, I just observe it, and I try to not trade because I have found that. And this is just my own weakness. If I'm trading, I'm too often biased. It biases my opinion. It makes me less objective because I want the market to go in the direction, that I have bet. So I try not to trade very much. It's just an acceptance of my own weakness. But we've done some recently because it was just so obvious in December that there was, the prices were going to rally. But as an observer, as someone who just does this basically every single day, it is, undeniably clear to me that every market is now managed, controlled, manipulated, however you want to put it. Now, and not directly. People say, well, how can the Fed manipulate the stock market? It would take trillions and trillions of dollars. No, they don't do it directly. The way it works is if you recognize that 90% of the trading on the New York Stock Exchange, on the CME, wherever, at least 90% of the trading now is done by HFT and by computer algorithm. And so if you are the Fed and you want to make the stock market continue to go up for the benefit of your banks and maybe some trickle down effect to the top 1% and that kind of stuff, well, then there are only two things you have to do to get the computers to do the heavy lifting for you. You got to get the dollar yen to go up and you got to get the VIX to go down.
Right.
And the computers that buy the futures, the computers that buy the shares, respond to those two trading signals. So if you want the stock market to go up, you don't have to buy trillions and trillions of dollars worth of index funds and all this kind of stuff. You just simply have to maneuver those inputs in the right direction, and you get the machines to do the work for you. You can watch it. VIX will almost always sell off late in the day, and the dollar yen will almost always rally early in the day. Mm-hmm. And it's those two things is what makes the stock market go up day after. Geez, Luis, just the last 6 months is remarkable. Somebody just pull up a chart of the S&P for the last 6 months. It's up 80% of the time.
That's right. Well, let me ask
straight
you,
up.
just as a casual observer, if you take a look at the VIX, they've manipulated this thing to the point where you would think they can't manipulate it any further because the VIX is hitting like all-time lows, right? And
like the zero bounded interest rates, right?
Yeah, like we've never seen this before. So it's
right.
Insanity. It's manipulation market insanity. And where does it end? Does it end? Because it doesn't appear like it's going to end anytime soon, and they don't care if everybody knows. There comes a point where these guys are so open with their fraudulent markets that even the casual observer like myself can see it. I'm not as technically astute as you, but I can see it. Mike Maloney can see it.
Sure. Well, and Sean, that's what I was driving at. So now, what was it, last week? It was right after the first of the year. Somebody, if you go after 5 years, the minutes of every single Fed meeting is released. John, John Titus, you ever talk to him? He does those great videos on YouTube.
Yeah,
and he uses those. The information's embargoed for 5 years because, of course, you can't tell anybody what actually happened in any shorter than 5 year. But anyway, it was just after the first of the year. The 5 year limit had come off. And here's Chief Goon Powell, the guy that now has taken over for Mother. And here he is saying, well, if we're ever going to, lower our balance sheet and all this kind of stuff, we got to do this. And one of the things he said is we got to start unwinding our short volatility position. Well, then there you go. Here it may have sounded 5 minutes ago like I'm some, raving lunatic talking about the Fed and Citadel and their primary dealer banks doing the bidding for them by pumping up the dollar yen and driving the VIX lower. But there you go. There's the current head of the Fed telling you that they are short volatility, that they are intervening in these markets on a daily basis. So it's not just, I'm not just some lunatic that, sits here with my tinfoil hat on too tight. This is actually how it works in 2018. And I hope people understand that, because as much as you try to control things, it's like trying to build a sandcastle, or you dig a big moat, on the beach, and you think, oh, this is going to be great. But pretty soon the water starts filling the moat, and then eventually some wave comes in as the tide's coming in and washes the whole thing. You can't stop it, Mother Nature, forever.
Right.
And just like that chart is parabolic on the Dow, it ain't going to keep going parabolic forever. And so these are the lessons that people need to be aware of in 2018, because this year is going to be a different animal than what we've been experiencing, and people need to be alert and not take anything for granted.
Well, before we move on to Bitcoin, because I want to ask you about the watershed event we're seeing in Bitcoin, really since the CME launch, which Terry Duffy was absolutely drooling at the mouth about, talking about investors' abilities to short Bitcoin because of his CME futures launch of the BTC vehicle. But let me just ask you this as it pertains to silver and gold then. When this manipulation of the Dow finally comes to an end and we see a precipitous fall, which presumably we're going to see at some point as gravity takes over, will silver and gold go much higher in your mind, or will they continue to be manipulated to the degree they are now?
Yeah, that's the thing. Everybody wants to see gold and silver pull a Bitcoin, right? And they could. It's possible that within the current structure that could happen. You go back to 2011, that was almost an extinction level event for the JP Morgan commodity desk and all the banks that were massively short silver. And yet interest was peaking and price was rallying. And what a lot of folks don't know or don't care to remember is in April of 2011, the data all showed that last 20% in silver from 38 to 48 was all bank short covering. I mean, people were led to believe, and there's still this myth out there that it was like, the shoe shine boy and the cab driver were all buying silver. And it was, no, right. That last big move was all bank short covering. And then that's what led to the Sunday, the May Day massacre and the 5 rate hikes in 9 days, or the margin hikes in 9 days and all that kind of stuff. I don't need to relive all of that. Moral of the story is it is possible for it to go up within the current system. Of the $15 trillion worth of QE that's been done over the last 10 years, just a small fraction of that starts to get interested, not only in silver and gold, but in all the commodities, that kind of stuff. I mean, it'll make 2009, 10, 11 look like a sideshow, like a warm-up act. But I think at the end of the day, what we really got to have is a change of the system. Because as you mentioned, it's a paper-driven system. People we'll almost call it alchemy at this point. The world has been convinced that digital gold, paper gold, whatever you want to call it, gold exposure is just as valuable as the real thing. Hey, look, I'm exposed to the price of gold. And I don't have to take delivery and all this kind of stuff. Well, no, what you're exposed to is this derivative price that the banks control with that derivative price by ebbing and flowing the total amount of derivatives. And then they can kind of flow physical metal into whatever price it is that's derived.
Yeah.
So until the system breaks, until demand finally breaks this kind of, what do you want to call it? Like a circle jerk Ponzi scheme. Where the music stops and everybody that thinks that they own gold and comes to claim their ounce and finds out that there's actually 100 other people claiming that 1 ounce, as you mentioned, until the music stops, we're probably not going to get, a real true valuation of the metals. We could still get, pretty significant rallies that, like I said, would kind of make 2011 look like a warm up, but to really strike the system all the way back down to where you have to exchange your paper for actual physical metal. That's probably still away, or at least, I don't know. We're one good crisis maybe away from that, but it's probably not happening tomorrow.
Well, it sparks a thought, too, as I think of Jeffrey Christian at that CFTC meeting back in 2010, talking about the merits of the paper in the system. According to him and the Wall Street buddies he's got there, they treat the paper metals just as they would treat the actual physical, and they trade it at 100 times the underlying physical. These guys should use that same alchemy to give the starving citizens of Venezuela some exposure to paper food, because maybe that would work, too, because you're going to find out, folks, that when the system comes down, if you don't have real food and real metals, you ain't got nothing at all, right? We say a lot. Yeah. We say a lot there, Craig. If you don't hold it, you don't own it. And I think there's going to come a time where that's never been more true. And it leads me to this question, which I have no idea what the answer is to. So you're the perfect guest to ask. When we see the Dow hit these types of heights, I've often heard that when the selling starts, there will be no liquidity. So these banksters, they know there's only so many chairs. Is it going to be one or two banks that goes under? Because who's holding all of these paper stocks? Who's holding Amazon at 1200? And to whom will they sell it when they want to go to cash? How does this watershed event happen? And will it take down all the banks or just a couple of the sucker banks? How does this whole Ponzi scheme end?
Yeah, it's something I think about quite often. And frankly, I don't know the answer. That's a thing that's impossible to predict. The only thing I would draw you back to was our most recent opportunity for that type of event. I'm trying to remember what year. It was August of 14, maybe 15. I have to go back and look. And we had been China, there's messes with China and emerging markets and all this stuff. And there was a week in August where the S&P was really getting the snot kicked out of it. And we opened on Monday, and the futures were down like 1,000 points, the Dow futures. And the S&P was limit down. And everyone was like, oh my gosh, we called it Blue Monday because it wasn't Black Friday, but it was on my site, we called it Blue Monday.
I remember that.
And the only thing that stopped it all was the 5% trading limits on basically everything from the equities to the equity futures, and the ETFs. They couldn't open down 10%. They couldn't open down 15% because of those trading halts. And so when things finally did open, the Dow didn't open down 1,000. It only opened up like down 700 and then rallied from there. And so, yeah, this idea of no bid and some massive crash. Again, what was 1987? 20%, 25% a day. I mean, that's always possible. But it's hard to see that in an era like we have today where all of these central banks are so involved and so much of it is done by computer, that if you can, again, just manage those inputs, you can affect the outcome. I might take a second and give you, I guess I'm thinking of one other example of this. Everybody, and I mean everybody, in the fall and in the summer, really, even of 2016, was out there telling you that if Trump got elected, oh shit, oh man,
right,
everything's going to go to hell. Oh, and maybe they'll elect Trump just so that they can crash the market, and then blame it on Trump and all this kind of stuff. I mean, you could not find anybody anywhere that said, well, if Trump gets elected, though, he's going to do this infrastructure plan, and he's going to cut taxes, and he's going to get this done. That was nowhere to be found. It was just going to be a disaster. And then Trump gets elected. If you go back to that election night, whatever it was, November the 7th, November the 8th, 2016. Oh, yeah, right. And everything was limit down. Everything was going to hell. And about 2 o'clock in the morning on that next day, the Wednesday, magically the dollar yen starts to crawl off the mat. Yeah, how about that? And about the exact same time, S&P futures were no longer limit down. They started coming back too. And by the time I woke up at 7 o'clock the next morning, Dow was down 100. And all of a sudden, every analyst on CNBC was talking about, oh, yeah, this is going to be great. Trumpflation, yes, and infrastructure and all the stuff that nobody, dared talk about before. Anyway, those are two instances of when it looked like, yeah, we were going to be bidless and yeah, there was going to be a crash. So while I think that things are, ripe for that and that chart is parabolic and all that kind of stuff, man, I tell you what, you could also drive yourself crazy and lose a lot of money by buying puts all the time too.
Oh, absolutely. I mean, how many hedge funds have gone out of business in this market because they can't figure it out? They don't want to trade. They can't trade anymore in a market that's so clearly fixed, where nothing makes sense, which I think this is a perfect segue over to Bitcoin. You mentioned the fact that I guess, it's plausible. It could happen that the Dow might plummet 17, 20% in a day, but it's not likely given the high frequency trading and the computer algorithms and the fix being in. But we see it in Bitcoin. And as you rightly note, you tweeted today, for those keeping score at home, here's the full daily Bitcoin futures chart dating back to the launch on December 17th. And of course, that was the CME's Bitcoin futures vehicle. And guys, look at the chart prior to that. Look at the history of Bitcoin prior to the CME futures, and now just look at the last month.
Yeah.
I don't know, Craig. I mean, it's not causation. I mean, I guess we can't point to it and say absolutely, but tell me how it's possible with only 16 million Bitcoin outstanding in the real world and probably less than that due to people losing their keys and hard drives crashing, etc. I've heard some estimates that there may only be 13, 14 million Bitcoin. How in the world do they exercise this kind of control through a Wall Street dollar-settled paper vehicle?
I don't know. I really don't. because I don't know enough about the specifics of the contract. I just know from history. You know, you look at uranium was another one like this. You can go back to 2005 to 2007. The price of uranium looked a lot like Bitcoin. And then uranium got uranium futures. And suddenly, over the next 3 or 4 years, it went all the way back down 90%. I don't know. You look at Bitcoin, all I know is the dynamic has changed from when I bought it, because I didn't really pay attention. I didn't understand it all the way through 13 and 14. It wasn't my bag, you know. But I finally figured out in the summer of 2016, this halving took place. And I was like, what the hell is this? And I finally understood. Oh, I see. So the amount of available supply gets cut in half. You know, new supply gets cut in half every 18 months or whatever it is. But yet demand is going to increase. Awareness is going to increase. Well, how the hell does that not work, right? There was always going to be this finite supply. Well, now all of a sudden there ain't no finite supply anymore, right? Now all of a sudden the banks have their hooks in it. And so I was kind of on the fence when the contract came out, because as I looked at it, the banks could also have made money by driving it up. I mean, why couldn't you buy yourself a bunch of Bitcoin and buy Bitcoin futures at the same time and drive it higher?
Absolutely.
Right?
Right.
I mean, that could have worked that way. But instead, what we're seeing is a bunch of what must be selling a Bitcoin at the same time as the futures going down. And now it makes you look back to that period in October and November, and that because Bitcoin was traveling along. I mean, it was, you could look at it on different scales and call it parabolic, but it went from, 1,000 to 2,000, 3,000, 4,000, 5,000. It went from 5,000 to almost 20,000 in what, like 60 days?
Yeah.
And that was in this run up to the futures contract. And we were speculating on my side at the time that one of the sources of that buying could have been the banks buying up their own little hoard of Bitcoin that they could short against and play the game on the downside.
That's interesting.
Now we're going to sell Bitcoin and sell Bitcoin futures. We're going to make a boatload of money. It's like, let me go back to, we talked about silver for a second. I saw a chart today and I thought, I got to remind everybody of this, because I remember all this stuff because it's what I do for a living, but I think, and I expect the whole world to remember this stuff. I'm going to send you a chart then in this instance so that people can understand what I'm talking about. And this is a chart, I think it's a Nick Laird chart from Gold Charts or Us, but it shows the plot of the price of silver versus the amount of silver that JP Morgan holds in the COMEX vaults. Okay, and this gets back to what I mentioned earlier about the near extinction event of April 2011. Back in April 2011, JP Morgan didn't even have a vault. There was no vault. Okay, there were Brinks and HSBC, whoever the other ones were. But JP Morgan didn't have it, but they had this massive short position apparently, right? We talked about Blythe Masters and all that stuff back in the day. And then you had this squeeze and silver went right, magically at about the same time, Sean, rushed through the approval process was JP Morgan to start their own COMEX silver vault. And so then they begin accumulating silver. Price immediately starts getting smashed. You know how that has gone over the last 7 years.
Right.
But over the course of the last 7 years, JP Morgan has gone from having 0 ounces of silver, at least in the COMEX vaults, to now having nearly 120 million ounces of silver in their COMEX vaults. Now, let's do the math. If you have 120 million ounces of silver, you can short against that stuff as the day is long. And next time, when price rallies, you don't have to worry about getting squeezed. You can just deliver that stuff. You've got this stockpile now that you can constantly be printing COMEX contracts off and selling them to the specs. And you see that everybody talks about the COT reports. Now open interest goes up and down. That's JP Morgan managing the market, issuing the new contracts, taking the short side of every rally, just making a regular, consistent income for their commodity desk by doing it that way. But they have the stockpile now that they can short against. Drawing this back to Bitcoin, is that what happened? Did JP Morgan and the other banks build themselves this massive stockpile? That's why price went up, because the way it used to be, you had to have a Bitcoin seller for every Bitcoin buyer. So price had to move up to find a seller if you wanted to buy some. And so price goes from 5,000 to 20,000. And now these banks that will make a market in Bitcoin futures have a stockpile of physical Bitcoin, if you want to call it that, just like JP Morgan now has a stockpile of physical silver. And now they can make a market and they can short against it in every rally. That I think, is what's going on. Like I said, I don't know about the specifics, and we can talk about how it's cash settled and all that kind of stuff. But if it's a futures contract, knowing who we're dealing with, the big banks and the CME, I suspect instead that this is the real story, that they build up a massive stockpile, and now they're going to manage the price going forward at the behest of the central banks.
All right. Well, we shall see. But I mean, it's a global market with global interest. And
Right.
so, I guess you could say the same was true with silver and gold, but we've never seen the interest in silver and gold, really, especially silver, that we're seeing in cryptos. And there's so
Right.
many people involved in this story in Asia that, look, I just want to say a couple things as it pertains to anybody holding cryptos right now who's feeling sick to their stomach because of this stuff. Let's just look at the big picture, and I'm going to share just a couple of anecdotes, and you jump in, Craig, and tell me if you recall this. When Pastor Lindsey Williams, back in, I think, 2012, maybe before that, 11 or 10, was telling me in interviews that his elite insider friends that he met up at Prudhoe Bay when he worked on the oil pipelines were telling him that they were going to manipulate the stock market to unimaginable heights. And when you thought it couldn't go any higher, it would go higher. And when you thought it couldn't go higher from there, they'd take it even higher still. And he said that the crash would come. He said, here's how you know when you need to get out. When the euro crashes, you got a week or two to get out because the dollar's next. Now, I don't know where we stand in that thesis, in that narrative as it plays out long term, but I'll tell you this. He was right, and I didn't think he was right when the Dow was at 9, 10, 11,000. I didn't think you could possibly go to Dow 25 or 30 or 40,000. But what he said is happening. He also made really spot-on calls with the oil market. Now, I just want to share this as it pertains to cryptos. Clif High has said, as it pertains to Bitcoin, the Bitcoin futures, Wall Street was going to, in his words, quote, screw the pooch on this one, and it wouldn't work. And ultimately, it would reveal them for the manipulators they are, and it would also reveal their manipulation for the whole world to see in the precious metals markets. He's been talking about February. I thought it was January, but Bix Weir is saying it was February. His call was February 13,888 Bitcoin. At that point, Bitcoin would soar far higher. He's got it going to 40,000 over the summer and evidently even higher from there. Now, I'm not predicting that's going to happen. I'm just sharing what Clif said, and Clif has been right about all of this crypto stuff pretty much from day one. So your thoughts on any of that for those that are hodling and are living through this, I think, bankster-induced crash. Your thoughts to anybody hodling any cryptos, silver or gold?
Let me just then go back and kind of revise and extend what I just said. I don't want to make it sound like Bitcoin's dead. I'm not one of these guys, that I just made fun of earlier, that's trying to make a career out of coin. I think it's great. I think it's any crypto is a wonderful complement to gold and silver. And I think that it's helping educate a whole new generation about alternative forms of money, all that kind of stuff. I think it's wonderful. Will the banks be successful? Ultimately, that's the question. Maybe not. Maybe because of everything you mentioned, Bitcoin will be fine. I think that in some regards, the genie's out of the bottle. I mean, it's like you're holding back, this water that's slipping through the banker's fingers, right?
Right.
It's going to flow. Okay, fine. You cap Bitcoin, and now you're going to manage Bitcoin. Fine. We're all going to move in mass to Ethereum.
Well, and by the way, can I say, when you say water slipping through their fingers, I visualize trust. They've lost all trust.
Yeah.
And even with these millennials, this younger generation growing up, they don't want anything to do with these God-blessed banks. Nobody wants to be involved with these criminals. So that's the good news, is they've lost all trust, just like the fake news media. If
it does betray my intention then too, I mean, I'm not sitting here typing out texts, pointing this out to people thinking, okay, this is another chance for me to work my evil master plan. But at the end of the day, that's what I'm trying to show too. I want people to understand, if the CME is doing this to Bitcoin, if the banks are doing this to Bitcoin, that hopefully trickles down to everybody that follows me on Twitter going, wait a second, you mean the banks aren't my friend? Seriously? The banks are out to screw me? Yeah. Yes, they are. Yes, they are. Even your local banker. That's where all the money's created in the U.S. At that local banker level, the guy in the nice suit that goes to Chamber of Commerce and the Kiwanis meetings and all that kind of stuff. He is screwing you. He is the one who is devaluing your savings. Okay, that's the current system that we have. So when I talk about Bitcoin, I'm not trying to make it sound like it's dead. It may be. Maybe the banks will be successful, but if they are, all of that interest in money, that genie's out of the bottle, if you will. It'll go into Ethereum. It'll go into Litecoin. It'll go into some other thing that is coming. Who knows? And they won't be able to roll out the futures contracts fast enough. to contain the money that can move, an instance from coin to coin. So we'll see. The main thing, though, that people need to understand, at least as I see it, is the banks and the central bankers are trying to control everything. This is the markets in 2018. You talk about guys being confounded and hedge fund guys being confounded because the stock market keeps going up because they don't realize it's not 1997 anymore. It's a totally different deal. And so we'll see if they're successful. We'll see if they can keep, all these plates spinning. In the meantime, I am confident that we've got this figured out for the long term in terms of things that we're holding, like Bitcoin, but also physical gold and silver. In the meantime, we'll just try to put the word out and educate and warn as many folks as we can. You do a wonderful job at that, and that's why I'm always happy to come on.
Oh, thank you, and you do too. And I'll just say this as it pertains to bubbly stock markets right before a crash or hyperinflation, guys. As our friend Lynette Zhang has pointed out in some interviews, take a look at the Venezuelan stock market. Yeah. Prior to the crash of that entire society and economic system. And now those people literally are eating their pets to try to stay alive. So honestly, guys, if you want, I know we're a broken record, Craig, but I think history will prove we're right. I mean, the 5,000-year history of silver and gold is on our side here. So,
and Sean, if I just want to add one more thing too, because I've become, this journey that I've been on is probably, and again, it's kind of similar to yours. I've been enlightened. I've become, I guess, almost even, I don't know if the word is more compassionate, more broad in my thinking over the last 10 years. And I look at what these banks have done, what the bankers and the politicians have done. This 10 years of QE since the crash has benefited people that had assets to begin with. Got a buddy of mine I was just on a trip with who was talking about how his 401k went all the way down to $400,000 back in 2008, but now it's up to $2 million. And I'm thinking, hey, good for you. That's wonderful. I'm excited. But, 63% of the American public doesn't even have $1,000 in savings.
Right.
So those are the people that have gotten just totally screwed by all of this. And they are the ones that we have to be worried about. They're worried about, care for. They are the ones that will really force change, too. They'll be the ones manning the guillotines if it comes to it. So, yeah, you mentioned, we've got to put the word out there and try to help people as much as possible because, these experiments like Venezuela, that's a sign. The stock market going up just like Venezuela's did after everything broke is a sign. We're headed in that same general direction, and that's what we have to be, again, preparing for and be aware of.
Yeah, amen. And look, you mentioned guillotine, so I'll just leave people with one little topical tweet here from Jerome Corsi, who today tweets, wow, Mueller, McCabe, and Rosenstein involved in cover-up of FBI probe into Uranium-1 bribes. Mueller vulnerable on Uranium-1 probe. You know who else is? Hillary Clinton and her minions, and I hope that Debbie Wasserman Schultz, John and Tony Podesta, and Hillary Clinton are all perp-walked in 2018, whether it's for pedophilic crimes, allegedly, that some of them are involved in, or hardcore treason. One way or the other, I hope that we see some trials for treason, Craig.
My friend, that's all part of why I mentioned earlier in this call, I think this year is going to be, whether it's political stuff like that, whether it's geopolitical stuff, that we worried about the Cold War and Korea and all that kind of stuff, or whether it's just regular disintegration of the dollar, the de-dollarization, the new the crude oil price in yuan contract that's coming, that kind of stuff. All of these risks are stuff that nobody's talking about in January. But boy, by the end of the year, I think we'll look back and realize that they were all right there staring in our face, and that's why things have moved the way they have. And that's why I said, man, this is going to be one wild and crazy year, so let's make sure we keep in touch.
Yeah, absolutely. The most tumultuous year of our lifetimes may well be 2018. All right, Craig, Thanks so much for joining us. Can you shout out all of the different avenues by which people can follow you on social media? I know you also have the TF Metals Report podcast.
Yeah, Twitter's fun. I like doing stuff on Twitter. Since I don't, most of my stuff on my site is, we have a paywall of $12 a month, mainly so I can afford my healthcare coverage for my family and keep the lights on and everything else. So I don't do a lot of just straight up public stuff. So I do Twitter for that kind of stuff. I might send out a chart or two every once in a while, that kind of stuff. So you can follow me on Twitter at TF Metals. Again, I really encourage people to check out the site. It's a great community of folks that again understand that we're all in it together. It doesn't matter if you consider yourself a liberal, conservative, Republican, Democrat, whatever. Right. We're all in this together. Yeah. At tfmetalsreport.com, I think it's there's some great value there for anybody that wants to join us.
Yeah, I couldn't agree more. And in the sense that we're all in this mess together, I'm really grateful. I have a grateful heart that people on the left and right, the left especially, are waking up to the crimes of Hillary. And her crimes were laid bare when they tried to steal that thing from Bernie. And they did. They stole it from Bernie and they gave it to Hillary. Yeah. And now even people on the left are waking up. So guys, the enemy of humanity, as I've been saying, there's a war on. And our real enemy are the banksters. That's the enemy of humanity. And like-minded people like Craig and me and others in the space know who the enemy is. So follow Craig over there at TF Metals Report. Guys, support him if you want to subscribe for some very great inside baseball information on these markets. And if you want to support us, you can do so by clicking at the banner at the top of SGT Report to get that new Roaring Lion silver coin from our buddies at SD Bullion. It's a beautiful 4/9 pure silver coin, a total mintage of only 50,000 in cooperation with the New Zealand Mint. It's a real steal of a deal at only $1.49 over spot. So check that out. And thanks so much for your support at sgtreport.com, the antidote to corporate propaganda 24/7. God bless, and thanks for listening. Bye-bye.
They were going to, quote, arrest 2 members of MS-13 out of Prince William Co., Virginia, for the cameras and the murder of Seth Rich. But because, quote, conspiracy theories literally started and went hard from the minute his death went public, they backed off as the momentum continued because they thought it would be too obvious. So they were going to ring up 2 MS-13, just say, we got them.